All right, this article is coming from fxstreet.com. Aussie yen slides 50 pips on downbeat. Aussie employment mix. Japan trade data. Aussie yen takes offer to refresh intraday low near 91.20 while making a nearly 50 pip of quick fall on the downbeat Aussie jobs report for April. Aussie headline employment change marked a surprise figure of a negative 4.3 thousand in April versus 25K expected. Wow, okay. So the employment numbers from Aussie were pretty bad. That's going to cause the Aussie to fall, indicating a less than robust economy. On the Japan side, we had Japanese merchandise trade balance improved. Okay, so that's going to that's bullish for the yen. You also had wage price index of zero point 0.8 quarter over quarter figures for the first quarter of 2023. That was below the 0.9. Again, bearish for the Aussie. What else we got in this article? Should be noted that the market's risk-on mood, mainly inspired by the receding fears of the U.S. debt, seemed to have fueled the Aussie yen run-up the previous day. So, excuse me. So the Aussie yen pair, that is a great risk-on, risk-off pair. All right. Risk-off. Well, then you're going to see the yen, which is a safe haven, go down in value, and the Aussie go up. So risk off, this pair is going to shoot higher. Risk on, this pair is going to shoot lower as investors and smart money is going to pile into the yen, which would appreciate and making this pair go down. All right, so additional hopes of more investment from China also underpin the cross-currency pair's recovery. As the State Planner, National Development and Reform Commission of the People's Republic of China mentioned on Wednesday that it will take measures to unleash consumption potential and to make continuous efforts in stabilizing and expanding manufacturing investments. So I think the Chinese economy is still not where it needs to be in terms of the pandemic recovery, and the world economy has been waiting for at least 6 months for this to happen. Lack of incentives for further upside, as well as a caution mood ahead of the key Aussie data, and doubts on the Reserve Bank of Australia's hawkish bias recently allowed a risk barometer to pair to consolidate the weekly gains. All right, so a lot of this is fundamentals, sentiments, weaker Aussie, and also weaker yen based on the debt ceiling in the U.S. getting resolved. So it's a matter of which one is weaker, right? All right, so let's just go straight to the charts. We're going to start with the monthly chart, and you can kind of see that it's been sideways for almost a year, right? I mean, the range is about 700-800 pips, but it's not trending like it was here, or trending like it was here, trending down like it was here, or it's pretty much kind of sideways, sort of like this, right? This is very similar, right? Okay, so I'm going to take this off so we can analyze a bit more. So if I look at current price, I go up and to the left. I'm looking for monthly suppliers, and I'm going to mark this area as a monthly supply, monthly seller's zone. And when I'm looking at the monthly chart, I'm looking at where the price stopped going up and started going down, and that was right here. As you can see, it hit the zone and pulled back about 1,000 pips. So we'll say that we have monthly sellers at the 101. Okay. And when I look on the current price, I go down and to the left, looking for monthly buyers. And I'm going to choose this area here as this is where we have to break out from this range. All right, so the price structure, the candle structure is not ideal because there was a lot of trading to the left, but nevertheless, that's where price broke out. And this is a monthly chart, so we'll mark monthly buyers at the 81, say 75. All right, let's go down to the weekly chart. And again, it's been sideways, but you have a downward bias. All right, since price hit the monthly sellers zone on the weekly chart, price has been making lower highs and lower lows. Right now, if price takes out this pivot, then officially we are in a sideways market. And if you don't know how to read price action, put some moving averages on your charts. And as you can see, we have the 13 and the 26 simple moving average pointing down. All right. This might be an area of interest on, say, a daily chart. That's the 85. All right, let's go down to the daily chart. So on the daily chart, prices are making high highs and high lows, but on the weekly chart, price was making higher lows and lower lows, right? So this could be potentially just the pullback before we see the next impulse move lower, potentially. We don't know if that's the case or not. All right, let's go back down to the daily chart. So what have we seen in the markets, the broader equity markets, since March? Potentially, and or factually, we know that NASDAQ has been ripping higher. The ES has about a 25% weighted tech, so that's been going higher. I think the lagger in the US has been the Russell. I think the Dow has been moving higher. European markets have been moving higher. DAX just made a all-time new high. So this is risk off price action. All right, so when I look at the daily chart, I don't see any levels of interest. Maybe this area up here, but it's not in love with it. And while I'm looking for imbalance outside of this range, right? Because that's where you're going to get the explosive moves down or up. Inside this range, you have equal buyers and sellers. It's going to be choppy, right? So what I'm going to do is just mark this area. So you can see price pulled back and then kind of trickled on down, right? So, but let's see if we have an area within the monthly sellers area. See, this was a great area. This is the type of price structure that I'm looking for. Had a drop in price, 2 basing candles, a drop and a pullback, and price took off, right? Not a lot of trading to the left. This is also a flip zone or resistance support band. So this was a beautiful area to have going short. This area you have a drop, and then you have many basing candles and then a drop. We'll isolate that level as well, but too much trading to the left of the drop. Now it could work because again we're in a monthly seller zone. So all right, let's go to current price. Let's look down and to the left, and hopefully there's a zone we set below this pivot low. Let's see. You know, so this area you had the origin of a strong move higher. Also takes out this pivot high to the left. But I don't like the structure. So what I'm going to do is just kind of isolate the area. The area down here is better than the structure here, only because this origin took out the pivot highs to the left. The zone is about, well, 200 pips. Let's see if we can go down to the 4-hour chart to maybe reduce that risk. See, this was a nice area. Broke the pivot high, pulled back to go long. All right. All right, so if I had to, let's do this. Let's put it right in the middle. All right, let's zoom out to the daily time frame. So we have 2 levels. We have this upper level and this lower level. This lower level is within the monthly buyers level. If I had to choose to pick a level to go long, it would be this one right here. Neither one is ideal, but if we zoom out to the weekly, you're going to have more of an imbalance between buyers and sellers down here versus in here. Same thing, you're going to have more of an imbalance between buyers and sellers up here versus right here. All right, so there's no setups at the moment. Price needs to break out of this range, either to the upside or the downside. I'll make another video on this pair in about 4 to 6 weeks. Thanks for watching. Subscribe. Please like the video.